the Federal Reserve to take down the S&P 500 and break the world. So here's a chart of the strong dollar strains the world. US dollar compared to the rest of the major currencies. Global inflation rates. Consumer price index. A warning for the world economy. The worst is yet to come. The International Monetary Fund lowered its growth outlook for 2023, suggested that interest rates can increase and could spur a harsh global recession, which we're seeing a lot of people getting laid off. We're seeing stock market, crypto, all going down. We're seeing inflation hit a lot of products that we use daily, gasoline. And we saw this coming before all the stuff that happened. The second we knew that the Fed kept printing money, we knew this was going to happen. This is no surprise. And now it's catching up. And as the Fed is, shrinking their balance sheet, we're seeing all this. Some of you might be asking, how long does a bear market last? Here's the past bear markets. Here's how long they last. Here's where we are. Now, on average is on the right. Now, as you can see, this is where we are. And this is what the average is. But I think it's going to be a little bit worse. But I can't predict the future, so I really can't tell you. But that's what the average looks like. And that's where we are. So we still got a long way to go. Social Security benefits to jump 8.7% in 2023. As top tax hits 19,865. Core U.S. inflation rises to 40-year high, securing big Fed hike. You can see food costs is rising 0.8% for a second month. We're 11.2% higher from a year ago. Used car prices dropped for the third month, while new car prices continue to rise. So where is inflation and where isn't it? Well, here's a chart of the 12-month change in the price of where it is increasing, where it isn't, where it's decreasing, and where it's going negative. And there's a couple key things that you can look at, like IT hardware and services. As you can see, a lot more people are going back into the office. The crypto hype is slowly dying down. NFTs, Web 3.0, staking, all that is kind of dying down. And as the Fed is decreasing their balance sheet, crypto prices are dropping. Stock market is dropping. Rental cars were going through the roof, before all of this. But now it's at negative 1.4, which is still not great. And as you can see, used cars are still up 7.2%. New vehicles are up 9.4% with the chip shortage and all that. Furniture, as people are moving around, are returning to work, or trying to find new jobs with all the layoffs and all that that's going around. Food at home, people need to eat. Gasoline, people need to drive to work. Energy, if the house is hot or cold, depending on where you live. Airfare, as people are traveling more, as they've been stuck in the house for a long time. Where is inflation getting worse? Here's a 12-month change in price of where inflation is getting worse. Airfare, household energy, food at home, pets and pets products. Where is inflation improving? Here's a 12-month change in price, and here's a chart for it. It is improving in all these places: gasoline, transportation, new vehicles, used vehicles, hotel rooms, appliances, rental cars, IT hardware and services. And as you can see, the crypto market is down as people were staking, mining, and the prices of graphics cards and all that was through the roof because there's a lot of hype around crypto. The Fed is set to target even higher rates as inflation continues to be stubborn. So for those of you that don't know, the Federal Reserve has to pay interest back to the banks. The payment of interest on the bank's reserve balances is a common monetary policy tool at the disposal of majority central banks. The Congress has authorized the Federal Reserve to pay interest on balances that banks hold at the Fed, and this was effective 2008. And the Federal Reserve has to pay this interest back to the bank. For those of you that haven't seen the September inflation report, let's go over it real quick together and talk about what they went over. Prices rise faster than expected, which is not a surprise to me, but maybe it is for some of you that don't know. The consumer price index rose 8.2% in the year through September. Another stubbornly high result, which doesn't surprise me. Market is going down, as you can see the stock market with all that's going on. Disappointing inflation data report keeps Democrats on the defense ahead of midterm elections. Food prices climb again, not a surprise. Weighing on household budgets, not a surprise. Rent inflation remain rapid, which is not a surprise. Used car prices are declining as much as economists have hoped. Gas prices fall slightly, but they're still on the rise. But overall energy costs are soon to expected to go up and increase. Retirees are getting an 8.7 Social Security cost of living rise, which is the biggest of the decade. Here's a takeaway from the inflation report. Monthly changes in September shows the increases in prices and where it's under, like eggs, electricity, new vehicles, airline fares. The Consumer Index report. Inflation remains relentless. By some metrics, inflation is hitting new highs. The monthly change in prices is also worrying. Rents are climbing sharply. Other services are becoming much more costly. Keep an eye on cars. For Fed, this is probably locks in that November increase in interest rates, which is going to happen more than likely. And this is bad news for the Democrats ahead of midterms. Here's rent inflation remain rapid, a troubling sign for whoever's in a rental place. With the economic data, unemployment rates are at 3.5%. Do I believe this is accurate? Probably not. And the reason I'm questioning this is because of this. You see all these layoffs. And not only this, I heard a lot of my friends getting laid off too. And companies struggling financially. Even solid companies are laying people off. You have Intel, which plans to lay people off, Oracle, Apple, which recently laid people off, a whole bunch of other companies. University hospitals to lay off 117 administrative employees. A lot of technology companies are expected to lay people off. Salesforce. So there's a lot going around the world, but the Fed can't stop the war between Russia and Ukraine. The obvious implication to global energy and food prices. They can't create more oil and gas. They can't stop the supply chain. Nobody is questioning what's going to happen if their plan doesn't work right now. Even if they have a plan. And there's a lot more that's going on, like earning vulnerability, global complications. A lot of debt defaults are going to happen. Energy crisis is currently getting worse with natural gases and electricity prices soaring or going to soar if they already haven't in your location. China's market is taking a hit too, but China has low inflation right now. High interest rates, relatively strong currency, which gives the country plenty of policy flexibility. The Fed is, though, determined to tighten monetary policy until inflation gets to a nice place. The massive sell-off continues as the Fed continues to tighten. The Federal Reserve's balance sheet outflow is picking up steam after the monthly limit on unreplaced maturities doubled to $95 billion last month. In the past week alone, it dumped $37 billion in assets. And stocks are dropping, as you can see. Crypto's already been dropping. Reserves in the Fed system have fallen to just about $3 trillion since last week, from their peak of $4.2 trillion late last year. The Fed's balance sheet reduction, which is capped at $30 billion for treasuries and $17.5 billion for MBS from June through August. You can see home prices dropping. You can see the low inventory of houses, but houses are still being built in a lot of areas. Unemployment continues and layoffs continue. Crypto's falling. So what should you do? One thing you shouldn't do is follow what Cathie Woods did. I'm just joking. Hold on to cash and wait for a great opportunity for entering solid stocks and finding great undervalued dividend stocks, discounted stocks, and then incorporate them in your portfolio. I'll have a couple brokerages links in the description below that I use, and you can use the links and get some free stocks. Here's the Fed's balance sheet versus the S&P 500. The blue line is the Fed's balance sheet, and the black line is the S&P 500. This is probably one of the reasons why we're seeing a lot of people not buying houses right now. Mortgage rates soar as Federal Reserve raises rates.